All right, what's going on, guys? Thought I'd bring you all a smart money concept strategy. Now, there's a ton of videos like these covering smart money concepts. This is nothing new, all right, but I thought I'd cover one that I've been using personally and I've covered multiple times on this channel. But I'm gonna gear it more towards smart money concept terms to make it easier for you guys to follow. Now, this does include supply and demand, support and resistance, change of character, and fair value gaps. So if you guys don't have a basic understanding on what each of these mean, then I recommend watching a separate YouTube video just to understand the basics of how to identify a change of character, what that is versus a break of structure, what a fair value gap is and how to draw them, what supply and demand actually are, etc. And then once you have an understanding, you can come to this video. Now, this has an extremely high win rate and is a rule-based strategy. So if you're looking for a set of rules to follow before you enter, then this video is for you. So sit down, grab a notebook and pen, and study up, because this one video could turn you from an unprofitable trader to a profitable trader. And the reason the strategy works so well is because not only are you using smart money concepts, you're also using my secret fib, aka the golden pocket, which works incredibly well across all assets. So this works on Forex, crypto, futures, you name it. Here are the rules. All right, rule number one. This is more for if you're entering on a lower time frame, but you want to make sure price is at a supply or demand or support and resistance level on a higher time frame. So if you're going to be entering on a 5-minute, you still want to make sure you have the higher time frame confluence. Is price, or did it already reject from a 4-hour supply zone? So once you have that initial confirmation that you're at a supply or demand on a higher time frame, then you can go down to the lower time frame and look for your entry. All right, step number two, you're going to be looking for a change of character. Now, this in essence is a shift in market structure. So in a downtrend, you're going to see lower lows and lower highs, right? The change of character is when you see that shift in market structure, and then you start to see higher highs and higher lows. So the change of character in this case on this little diagram I pulled up would be right here as you make that higher high. All right, step number three is you're going to wait for a retracement to the 0.618 or 0.65. You could also use a 0.702 fib as your entry as well. The 70% retracement is very good. But you're going to wait for a retracement down to around the golden pocket after the change of character has been made. But you don't want to see just a golden pocket. Can it work with just a golden pocket? Yes, but for the maximum amount of confidence and the highest probability trade, you want to see a fair value gap or order block confluence. I don't know why it says OG. Order block confluence. So that's where the smart money kind of comes into play here. So if you see that you have a fair value gap at or near this golden pocket, or a supply or demand zone on a lower time frame overlapping this golden pocket, then you know that your trade is indeed valid. Step number five is you're going to enter the trade with your stop loss above the swing high or below the swing low. There are exceptions to this, right? If you're in a lower time frame, I'd probably put my stop loss, if I'm entering right here, I'd probably put my stop loss below this swing low. And you can DCA 1 or 2 times down if you want as well, or you can have a single entry, put your stop loss below this swing low. Now, that being said, if there's a fair value gap, right? If there's a fair value gap right here overlapping that golden pocket, then you might want to put your stop loss below that fair value gap, because at that point your trade thesis is invalidated. So there is context to the trade. Every trade is different. So even with a rule-based strategy, I've covered this in other videos, not every trade is going to be the same. Now, these are kind of rough rules as well. There could be a fair value gap overlapping a 0.5 fib. So then you might want to enter at the 0.5 fib because there is a fair value gap confluence. So it might not even reach the golden pocket, but these are the rules that I use. One of my trading rules is that I always wait for at least a 61.8% retracement in any market condition. So I'm always forcing myself to buy low and sell high technically, right? Now, it doesn't always bounce from the golden pocket, but if you're following all of these rules, right, you're waiting for that higher time frame confluence, you're waiting for the change of character, and then you're waiting for the retrace down to the golden pocket, and you're looking for other confluence. This is such a high probability trade. You can get away with a 4 to 5 risk to reward ratio and hit 25-30% of the time with, a 4 to 5 risk to reward ratio, right? These are realistic numbers. If you compound these trades over time, the profitability is just insane. All right, step number 6, like I said, you can DCA your entry. I'd honestly only recommend this on a higher time frame. So like I said, this works across any asset on any time frame. And I'm going to actually show you guys some real examples as well shortly after I go through all of these rules. But I'd only recommend to DCA on a higher time frame, such as a 1 to 4 hour. And if your stop loss is a little bit wider, then you can have 2 to 3 entries. Again, there's context involved, right? If you're entering at the 0.618 and you see that there's a strong demand zone, then you might want to dollar cost average 2 to 3 times into that demand zone. Right. So like I said, every trade has different context. That's up to you to kind of figure out as you're going along. And then rule number 7 is you're going to target the lows, point of control, or easy algo confirmations. So in this case, right, you'd be targeting the highs. So you'd be entering right here. Honestly, you'd be targeting probably here for your take profit 1, this high for your take profit 2, and then if there's another high right here, maybe right here for your take profit 3. Or you could just target one high. Right, you can have a large risk to reward ratio and just target that high. So that's kind of up to you as well. Maybe you could target this high right here. Personally, I'd probably take at least half at this high, move stop to break even, and then let the rest ride, right? Let your runners run. But you could also take profit at a point of control. If you see there's a point of control on the volume profile right around here, then you might want to consider taking profit before you reach that high. Also, using easy algo confirmations is very, very helpful as well. If you guys want the #1 trading indicator, a price action indicator, this is not like those other bullshit indicators that just have buy and sell signals. You want something technical, then be sure to click the first link in the description below. We're adding our own smart money concepts indicator very shortly, so be on the lookout for that. But I find that the easy algo confirmations definitely help with the strategy. All right, now that you guys understand the basic rules, I'm going to show you guys some live examples of this playing out. All right, here are a few trades on GBP JPY on the 5-minute. These trades are from this week, so I'm not going back and showing you price action from a few weeks ago. You can see we have these pretty clearly defined range lows and range highs. So that would be rule number 1. Rule number 2, we saw a sweep of these lows on a lower time frame, right? We saw a sweep of these lows, which is a change of character, because now that we've made lower lows, we are in a downtrend, and we saw that retrace to the golden pocket, right? Perfectly hits the 618. All right, we also had confluence with this supply zone. All right, so even though it's not super noticeable, right, we did have this, resistant supply, call it whatever you want, as an underside test. And we also grabbed the liquidity from this candle wick right here. From this candle wick, if I do Alt J, right, we grabbed that liquidity and came back down. So a nice swing fail as well. I didn't add swing failure onto, the list of rules, but you could definitely add a swing failure as well. If you see a candle wick like that, comes up to that supply zone, grabs the liquidity, tags a golden pocket, that's when you're going to enter the short position. In this case, I'd put my stop loss right above the golden pocket, because at that point, my trade thesis is invalidated. And you'd simply be targeting, these lows. I think you'd actually get out around here, because the easy oscillator is in the oversold zone. And we also saw a bearish divergence on the easy oscillator at the top too. So definitely be sure to use the easy algo confluences as well. I mean, the easy algo indicator is the best at what it does and adds an insane amount of confidence to your trade. So if you see that the oscillator is approaching the oversold zone and you get that mild buy signal, that's probably a good time to take profit. And what do you know, price comes up. But technically, you could have held until the range lows. But our rules is that we're going to get out on the next bullish easy algo signal. All right, comes down to the range lows. Again, we get a sweep of those lows with another bullish divergence on the easy algo and a buy signal, and price comes up. Now, this is a completely different strategy, but just goes to show, how well the easy algo indicators work in a market like this. Right, comes up to this resistance level again, another swing failure with a bearish divergence. Guys, these divergences are in real time, mind you. So we get another bearish divergence, and the same thing happens again. All right, literally watched this happen this morning in the Discord. We saw a sweep of those lows, right, a change of character. Same thing happens again. We come up to test that golden pocket, enter a short position, your stop loss above the swing high, and you're going to target. In this case, we actually targeted the point of control. So at the time, the point of control was literally at the bottom of this wick. So that would have been your take profit, right? Again, a 5 risk to reward ratio. You take profit and then price goes back up. And honestly, at this point, it wouldn't be a bad idea to look for a short on GBP JPY. We see that we are at that resistance level. We already saw a sweep of those highs. We had that mild sell signal on easy algo. At this point, I'd be looking for a change of character. At this point, you'd be looking for something like this, where you see a change of character, come back up to retest that golden pocket, and then enter a short, right? So you'd see a change of character right around here, and then you come up to test that golden pocket, and hopefully you have some other confluence. At the current moment, it looks like we're forming some sort of supply, so could see a retest of that supply tag of the golden pocket, and your short would look something like this. But you're waiting for that change of character, so you must be patient, all right? You can't sit in front of your computer all day and scalp using this strategy. No, you have to wait for the right setup, but more often than not, these setups will play out. And here is an example on Ethereum. This is a setup I posted in the Pro Discord in advance. I was looking for a short literally right here. And the reason being is I'm following the strategy I've been showing you guys. So we had a fair value gap, number one. Price tends to fill fair value gaps, especially on a higher time frame like the 4 hour. But I saw this trade was valid because we had that move up, and then we had a change of character right here. We saw new lows confirming a market structure shift, and we had a retrace to that golden pocket with the fair value gap confluence. Entered the short position right there, stop loss above the fair value gap in this case, and that would have been a sniper entry, and you can target the lows. Also can take profit at the reversal buy signal on easy algo and the bullish divergence. That's it for the strategy, guys. Like I said, this is a price action based strategy, a smart money concept. I guess you can call it strategy. It uses a ton of confluence, and if you wait for the right setup, you will get paid. All right, I promise you that. Feel free to go and back test this yourself. Let me know the results you find down in the comment section below. Leave a like on the video if you enjoyed, subscribe to the channel for more trading content, and I'll see you guys next video.